The federal government announced billions in new housing money this week, much of it geared toward helping provinces build infrastructure to support housing construction.
People are being priced out of their communities, and that's not okay. So we have to help nonprofits and community partners acquire units and preserve rents at a stable level. That's why we're here to announce the $1.5 billion Canada Rental Protection Fund.
Today, the government announced that $1.5 billion housing fund to help nonprofit organizations acquire rental units across Canada. Yesterday, $15 billion for apartment construction loans. And Tuesday, $6 billion for provinces and municipalities if they commit to certain conditions. This approach is being labeled Canada Builds, but will it actually help builders start building homes? Joining me now is Kevin Lee, the CEO of the Canadian Home Builders Association. Kevin, it's good to see you again. Thanks for joining us today.
Thanks for having me.
Billions and billions of dollars. I mean, this cash infusion aimed at addressing the housing supply crunch, what kind of a difference is this going to make in helping homes get built and get built more quickly?
Well, it's definitely going to make a positive impact, especially, the recent announcement around infrastructure. Infrastructure is obviously critical. We talk about building houses, but we can't have the houses if we don't have the infrastructure. And something that we've been asking the government for quite some time is to tie that infrastructure investment to housing outcomes. And that's something that the government is looking to do. And so it's something that, the provinces aren't always big fans of, but it'll take 3 levels of coordination to make this happen. But getting that money into infrastructure is going to be quite important.
So on that, the conditions that some of the provinces really don't like is, for example, making fourplexes baseline available to any developer on a building lot anywhere in a particular province. I understand how creating 4 units on a single lot would increase the availability of places to live for people. How does that change the economics for home builders? Does that make it more lucrative, more valuable, or just easier to start building?
It really depends on the situation. Typically, when you can put more units on a given lot, it does create better economies of scale and that. But I think the real reason the government is looking to do that is this idea of better land use, more intensification, being able to get more units closer to services, limiting expansion of cities, that type of thing, and the other thing is it's not just about new communities. It's probably almost more important for existing communities where we have, so much single family development, which was good in the past, but, needs to change moving forward. So it's probably as much or more about existing communities than it is about new development.
When we look at some of the projections from CMHC, the Canada Mortgage and Housing Corporation, they're looking at housing starts being either down this year, flat, or down the next couple of years, primarily because of the interest rate environment that we're in. Is there anything you've seen in these announcements by government that can help reverse that trend and maybe offset some of the negative pressure that your members are feeling from the interest rate challenges?
Yeah, that's a really important question, and we do need more on that front. So, there's been quite a bit in terms of announcements to support more purpose-built rental, and we have had a major shortage of purpose-built rental for many, many years. So it's good to see more of that coming online. But part of the reason that we're needing more purpose-built rental has become so hard to become a new home buyer, and home ownership rates have been dropping, as everybody knows, and young people know just how difficult it is to get into the market. So we do expect it to be a slower year in the year ahead, especially in the single family market. We were down 25% last year in single detached starts, so a huge drop. We expect more of a drop this year. So we are looking for things, and hopefully, coming with his budget, things like 30-year amortization periods for insured mortgages for first-time buyers, just to give them the buying power to be able to get into the market and then in turn create that supply. I mean, in simple terms, we can't build more housing if people can't afford to buy them.
Right. So we don't yet know. I mean, we may know by budget day what they're going to do on mortgage rules because they're announcing something every day. Announcing seems to be the focus. So maybe we'll get that clarity. But there's the money there for the infrastructure to lay the sewer, the water hookups, the electricity, the roads, to allow for new developments. There's low interest loans to help with apartments. If they do change mortgages to increase the buying power for young people, as you're saying, all of that helps there. But if interest rates don't change, Can your members still do this at a scale that the country requires right now? And can you do it with the workforce as it exists right now?
Yeah, there's no question that we're swimming against the tide right now if we try and increase starts with interest rates being where they are. And that's why something like the change to the amortization period for first-time buyers on insured mortgages would really help counter what's happening with interest rates. Interest rates will start to come down a little bit. It won't be enough to make that huge difference. So we really need a comprehensive approach in all areas. Even things like, the stress test is another thing that's preventing well-qualified buyers from getting into the market. And so we really need to look at that mortgage side of things. To your point about labor, we definitely have tight labor markets. We don't have enough labor. The government is starting to make changes to not only immigration in terms of numbers, but trying to target construction workers more. We need to do more on that front. There are some more changes that are important to bring in more people. And we are looking at how do we increase productivity by moving towards more factory built. But again, we're going to have to de-risk that, and we're going to have to see the buying power of Canadians there in order to then turn around and justify making those kind of investments to move to more factory built approaches.
Some of the measures we're seeing announced nationally, they're modeled after what the British Columbia government has done. The apartment loans, for example, and the nonprofit low-income housing measures that were announced today. The goal there in BC is reducing building time from 12 to 18 months down from a 3 to 5 year timeline. Is that realistic on a national scale with all of the factors we've just discussed and the measures that have been outlined by the government so far?
Well, I think it's really important that we do target that. And, a lot of this comes down to approval timelines, permitting, all of these things that sort of that red tape side of things that we hear so much about. We're a very heavily regulated industry. And then on top of that, there's a lot going on at the municipal level. So the more that can be done to streamline all of these approval processes, permitting, et cetera, the faster we can get shovels in the ground and get these units built. So it'll take some time. Interestingly, we're even seeing artificial intelligence work its way into the equation. Cities like Kelowna are looking at permitting that makes use of AI to do things online and get permits out really quickly. So that's the type of innovation we need to help move it on all fronts.
I think the last time we spoke was when they removed the GST on purpose-built rentals, and that seemed to have worked. That you mentioned the drop of about 25% in single-family homes. That was offset to some degree by a surge in apartment construction. Is it the mortgage changes that would be the big thing that will move things that you want to see in this budget? Because some of the things they've done, the criticism has been they're kind of playing at the margins, but that seems to go right to the heart of the affordability question, at least based on what I'm hearing from you. Is that the number one thing you want to see from Chrystia Freeland on the 16th?
Yeah. Yes, it really is. We really need to be able to get that first-time buyer into the market. And the nice thing about targeting that, if you target 30-year AMs, for insured mortgages, that's the first time buyer. They're buying entry level homes, which we need a lot more of. They're probably, higher density units, as starter homes tend to be. They're very low risk. First, young people are the lowest risk group in terms of mortgage arrears and all of that. And we're at record lows in terms of mortgage arrears. We're at less than half of the normal long-term rate for mortgage arrears. So we've really we've done too much, frankly. We've made it very hard to get into the market in the name of protecting Canadians and the market, but we've probably over-tightened by quite a bit, and there is room to allow more people into the market without creating risk. And by really focusing on new construction, if you did with 30-year AMs, you're not creating demand and boosting prices in the existing housing market. You're really just encouraging new construction, which is exactly what we need.
Kevin Lee, CEO of the Canadian Home Builders Association. I always appreciate the time. Thank you, sir.
You bet. Thanks for having me. Anytime.